Gravitas, co-presented by Skoda. Kushaq, choose what really matters.
You see, Evergrande is not an isolated case. The entire real estate market in China is a disaster waiting to happen. A housing bubble of epic proportions. If this sector collapses, it could take the entire Chinese economy with it. Our next report tells you how China missed the warning signs and what this could mean for the global economy.
Wide empty roads, deserted intersections and unoccupied towers. These are the ghost cities of China, built for a middle class that never came. Construction was considered the engine of China's growth. Local Communist Party officials lured developers into their towns. They had just one rule: start building ASAP. Chinese developers obliged. They borrowed billions of dollars and built tens of thousands of apartments. When city limits ended, they expanded beyond into the outskirts and rural China. But the occupants never came. It is a story of two Chinas. In big cities, homes are hard to find and even harder to buy. That's how expensive they are. But once you leave the cities, you will find acres of real estate empty and forgotten. The two Chinas have one thing in common though: debt. Property prices in cities were clearly inflated. But the banks didn't seem to mind. They kept sanctioning loans for overpriced homes. Same for developers. Bank loans funded their massive construction spree, their ghost towns and their empty towers. And the problem with loans? Well, interest. The Chinese government was concerned about the rising ratio of debt. So they did what they do best: a clampdown on borrowing. This triggered a chain reaction in the housing market. No loans means no buyers. And no buyers means no business. Chinese developers started running out of cash. They didn't have money to pay the banks. What we described is a classic housing bubble. The signs were always there, but China chose to ignore them. Sign number one: the rate of construction. China was building 5 times as many houses as America and Europe combined. The result? Around 50 to 64 million empty apartments. Assuming 3 people per house, that's more than 150 million potential occupants. You could fit entire countries in China's empty houses. Sign number 2: the inflated housing market. In Shenzhen, condos are selling for 57 times the average national income. In Beijing, 55 times. Simply put, buying a house was becoming impossible. So what does this mean for the Chinese economy? Major trouble. Real estate is the cornerstone of the Chinese economy. It makes up 30% of the GDP and 78% of all Chinese assets. So if real estate collapses, it will take the Chinese economy with it. And things seem to be moving in that direction. This year, 220 real estate companies have filed for bankruptcy. Bad loans in the property sector are surging. A 53.5% rise at the Bank of Jinsao and 25.8% at the Bank of Shanghai. Turns out real estate wasn't the engine of China's growth. It was their Great Wall of Debt. And unlike the Great Wall of China, this one is crumbling. We still don't know the real extent of this bubble. How many commercial banks are exposed? How many multinationals depend on Evergrande and company? It is being called China's Lehman moment. But this crash could make 2008 look timid. Bureau Report, WION World is One.
WION now available in your country. Download the app now. Get all the news on the move.
Gravitas, co-presented by Skoda. Kushaq, choose what really matters.